Markets are moving fast on this headline. Let me give you the calm version of what just wiped $1.3 trillion off that candlestick chart. On June 5, 2026, the Semiconductor Index crashed 10.3%, worst single day since March 2020. Nvidia fell 6%, Micron dropped 13%, AMD down 11%. Broadcom, the company that lit the fuse, ended the day down 3.7% after being down 13% before the opening bell even rung. I was watching that futures screen overnight, and it was ugly. Total semiconductor market cap loss, roughly $1.3 trillion per Reuters. That is not a typo. $1.3 trillion gone in a single trading session. If your 401k statement leans heavy into tech, you felt this one at the kitchen table. That nest egg you have been watching climb for 2 years just took a real punch. And the timing is what makes this hurt. The same morning, the May jobs report came in at 172,000 new jobs. Wall Street expected 85,000, double the forecast. 172,000 jobs sounds like good news if you are looking for work, and it is. But for everyone already paying bills, it means the Fed is in no rush to cut rates. Rate hike expectations shifted from 2027 into late 2026. The 10-year Treasury yield surged above 4.50%. So the money you owe on your mortgage just got more expensive at the exact same time your portfolio got cheaper. Look at that yield curve chart and tell me it does not make you wince. Your cost of living just went up and your savings just went down on the same day. That gas station sign you drive past every morning is not getting cheaper. The grocery cart wheel is not getting lighter. And now your investments are worth less too. That is the squeeze nobody on television talks about. Your paycheck has to cover more ground while your investments cover less. Here are the specifics. Broadcom reported Q3 AI revenue guidance of $16 billion. Wall Street consensus was $16.3 billion. Some analysts were whispering $17.5 billion. Broadcom missed the number. Then management just reiterated their fiscal 2027 AI target of over $100 billion without raising it. No upgrade, no upside surprise, just a shrug. $16 billion is still a massive number, do not get me wrong, but in a market price for perfection, close does not count. Wall Street wanted a beat and a raise. Broadcom gave them a meet and a repeat. That is a very different signal. If the AI revenue machine is slowing down even a little, the whole valuation story changes. That is what spooked people, not just the miss, the lack of a raise. Reuters confirmed the total semiconductor market cap loss at roughly $1.3 trillion on June 5, 2026. The BLS jobs report that same morning showed 172,000 non-farm payrolls versus a consensus of 85,000. That jobs number is a big deal because it tells the Fed the economy does not need rate cuts. It might even need rate hikes sooner than anyone planned. The S&P 500 fell 2.6%. The Nasdaq dropped 4.2%, but the Dow rose 874 points to a record high. Pull up a heat map of sectors, and you see money pouring out of tech and into value and defensive names. Utilities, healthcare, consumer staples, all green while semiconductors bleed red. That is a rotation, not a crash, at least not yet. The Dow hitting a record on the same day. The Nasdaq dropped 4%, tells you everything about where money is going. Out of growth, into safety. Ray Dalio at Bridgewater warned that AI bubble indicators are approaching 2000.com levels. That is a big name saying a big thing on a very bad day. Some analysts are calling this a healthy correction. The Semiconductor Index was still up strongly for the year even after the drop. Maybe they are right. Maybe this is just a breather. But when Dalio says.com, I pay attention, and you should too. 3 things to think through. First, check your 401k allocation right now. Not tomorrow, right now. If you are 60% tech and you did not realize it, Today was your wake-up call. Open that phone stock, app green arrow, and look at what you actually own. A lot of target date funds are heavier in tech than people think. You might be taking more risk than you signed up for. Second, do not confuse a sector rotation with the end of the world. The Semiconductor Index was still up big for the year even after this drop. Panic selling on day one is almost always the wrong call. But do not confuse a correction with a buying opportunity either. That is how people catch falling knives. Wait for the dust to settle. Third, watch the 10-year yield. If it stays above 4.50%, borrowing stays expensive. That is your mortgage, car payments, the credit card bill, not just stock prices, your actual cost of living. Keep an eye on that bank statement envelope when it comes next month. If yields stay high, everything from home loans to auto financing stays painful. If this made sense, tap subscribe. Next time those volume bars spike, you will hear it here first.